What's up, everyone? Welcome back to the Blockchain Almanac Weekly Crypto Report, where we educate, protect, and empower all investors in the blockchain space. And always remember that blockchain is more than just cryptocurrencies, but it's still important that we keep track of these markets. So we're here to help you do that without any of the hype and with a data-driven approach. Another week, another round of blockchain and crypto news. And what an interesting week it's been, with Bitcoin prices hovering around 9,700, but with some really interesting on-chain data. If you take a look at Bitcoin addresses with balances over zero, we reached an all-time high. The SEC commissioner proposed a new law, a safe harbor law for tokenization. And finally, JP Morgan just came out with a new research piece talking about crypto, blockchain, and going mainstream. So let's get you all caught up. So Bitcoin had an interesting week, moving up 500 plus points on Tuesday, breaking that 10K mark, and then falling 500 points on Wednesday and holding steady around 9,700. Now Ethereum and altcoins had a very similar pattern this week, and this type of volatility is pretty normal for crypto markets. But a key on-chain metric to take a look at is the number of Bitcoin wallets with deposits above zero at an all-time high. With Bitcoin on fire to start the year and looking to make a sustained run for the rest of the year, it's a good time to take a look at some of the on-chain data. And one metric to really keep an eye on is the number of addresses with positive balances reaching an all-time high. Now in total, there are about 615 million Bitcoin addresses, and over 28.7 million addresses currently have a balance above zero. And 788,000 hold more than one Bitcoin. And around 154,000 addresses have a balance of 10 or more. These are numbers we haven't seen since the peak of the crypto craze in December of 2017. And while it's important to remember that unique addresses don't represent the number of people holding Bitcoin, a continued rise in these figures would seem to be a logical correlation to an overall increase in the market cap. SEC Commissioner Hester Peirce released a proposal last week that called for a safe harbor law for cryptocurrency distribution in the United States. Peirce is known to be one of the more forward-thinking voices in the SEC regarding blockchain issues. The safe harbor would provide blockchain network developers with a 3-year grace period, where they would be exempted from registration provisions of the federal securities law. The 3-year timeframe would allow token issuers to develop their networks and distribute their tokens without having to register these assets as a security. Now, projects would also be required to undertake good faith efforts to create liquidity for users. Now, at the end of the 3-year period, the SEC will then make a judgment about the maturity, the utility, and the decentralization of the tokens, and then decide if they are deemed securities. Now, although it's uncertain if this proposal will gain any traction, it shows that the SEC continues to demonstrate a strong willingness to engage the blockchain industry and to help shape these issues. JP Morgan released a new research report on crypto and blockchains, and they're bullish on blockchain and a little bit bearish on crypto. Now, the report discusses the massive uptake and rise of blockchain technology in the last few years. The in-depth report gives several encouraging descriptions about the state of adoption, but also takes a bearish approach to cryptocurrencies, demoting them to a second-rate investment. The report emphasized the limited role that cryptocurrencies still play as a hedging instrument in the global portfolio diversification process. The firm argues that cryptocurrency on its own is not a reliable hedge that can protect investors from loss of confidence in traditional markets. Now, this differs from the attitude of other asset management firms that have expressed more positive views about cryptocurrency serving as an effective hedging tool. Now, with crypto markets starting the year off strong and the number of factors that could contribute to turbulence in global markets, it will be very interesting to see how crypto reacts to traditional market volatility. So those were your top headlines for the week. Now let's take a look at the blockchain benchmark report. The blockchain benchmark had another down week, down 1.19%, with Bitcoin, Ether, and Ripple all in the red. The SMID cap index also with the second down week, down 3.38%, with True USD and Dogecoin down double digits. Market dominance, gives you a nice sense of what the overall crypto markets look and feel like, with Bitcoin still very much on the top of the list, but with Bitcoin Cash, Bitcoin SV, and Litecoin all fighting for that fourth spot. And when you look at the year-to-date numbers, the large cap benchmark index is up 45.08%, the SMID cap index is up 66.17%, and the S&P is up 3.6%, and gold up 8.1%. So thanks for joining us for this week's crypto report, and remember, crypto is risky, so make sure you allocate appropriately and use caution. Now at the blockchain benchmark, we don't drink the industry Kool-Aid, but we're huge believers in the fundamentals of blockchain. So we're here to help you track these markets responsibly and with an eye on risk-adjusted returns. So if you like this type of information, if you like this video, please subscribe to our channel and make sure you come back next week for all the latest trends and headlines happening in blockchain and cryptocurrency.